Hey guys, today I have a little bit of a trading trick for you. That's right, a trading trick. It's not something that's going to make you be able to go out there and buy a new Ferrari tomorrow. If anyone ever promised you that kind of stuff, just run for the hills. It's just crazy. But something that's really going to help you. Now, we have earnings season coming up. Our corporate earnings season starting this coming week, which is mid-July 2019. And the first batch of earnings usually come from the banking stocks. Companies like Citigroup, Bank of America, JP Morgan, that kind of stuff. And one of the big things that I always tell my students pretty much every single day is we want to stay out of trading positions. I'm not talking about long-term investment things, but trading positions through known unknowns. What's a known unknown? A known unknown, for example, is an earnings report. You know the report date, you don't know what the outcome is going to be, and you have much less so have an idea of how the stock will react. We just don't know. There's other unknown unknowns like economic data and many other things. Now, the tricky thing about this thing is, like right now, for example, I'll show you this, the banking stocks are actually setting up very bullishly into earnings season, but I really don't want to do a trade on any single name of these stocks because I don't know how they're going to react to earnings. I really don't know. It's a 50-50 chance if you historically backtest it, which we have. There's a way around it, and I'll show you. So let's have a look at a simple chart. Here we're looking at a sector ETF. This represents the financial sector of the S&P 500. In fact, if I make this a weekly chart, you guys will probably be able to see this even a little bit better. Let me drag this here. And what you can see is something that's fairly constructive through the lens of at least price behavior. You can see a very simple diagonal resistance line. We've got a series of higher lows that has now recently led to a break above this line. Very simple technical analysis stuff, potentially a little bit too simple. But if I go a little bit deeper, and as you would expect, if the sector does this, you'd expect some single name stocks to look very similar, right? Here's Citigroup, for example, a constituent of said sector ETF. You can see diagonal line, breakout, excuse me, series of higher lows. So again, one of the big things that I tell my clients, like I said, probably every day, is that you do not want to do a trade, and I mean a trade, not a long-term investment, through an earnings report. So there's no way I'm going to buy Citigroup right now ahead of its earnings report, because I don't know how it's going to react. I mean, for all I know, it's going to blast higher, but it may not. It may correct a little bit, and then I get a chance to buy it lower, for example. But one way you can kind of get around this is by just looking at a sector ETF. So we just looked at the XLF. Let me go back to this. And the XLF, again, this covers the entire sector. So this covers, more than just banks. It covers like insurance companies and other financial outfits. So by buying a sector ETF, I am much more diversified. So if Citigroup were to drop and other banking stocks were to drop, this probably wouldn't be as catastrophic, right? So instead of making a single bet on Citigroup, which is a very concentrated bet, or Bank of America, or JP Morgan, or whatever stock that's reporting next week, and whatever financial stock, whatever banking stock, I can make a bet on the sector, right? Which is much less concentrated. Yes, you'll have less upside if the thing goes higher, but at least you'll participate, and it's just a better way of doing it. So this really is, honestly, it's just part of the top-down approach that we use here at the Steady Trader and Blue Oak Advisors. In fact, if you look at our market rover, which is this thing right here, this entire top-down process starting on the sector front and then going into individual stock based what's happening on sectors and groups is really what this is all about. And really, if you think about it, what I just showed you is just another way of using that through earnings. So if you guys find this helpful, this kind of stuff, leave us a comment down below, give us a like, tell people about the channel, share it, and I'll talk to you soon.